Hello, my wonderful people. We are back again today, and as I promised in my last video, I was going to do a continuation of the market maker. So today we are tackling the market maker, but the mobile version. So the tutorial for today will be quite short because it's just a continuation on 1 minute spy catching. Yeah, 1 minute spy catching, but mobile version. So let me believe this will just be like 15 minutes or so. Okay, so here we go. The settings is equally the same as the other one. So the lower window is here is TDI, and I believe those who've installed or those who are able to access it from our channel, you will be able to download a PDF that has instructions for how to install a TDI on mobile phone. Okay, so let's check these indicators on the moving average. It is just 3 or 4 indicators, okay, but they are all moving averages, nothing else. So it's just the TDI and the moving averages. So let's check. The first one is moving average 13. Apply to simple close, whatever color you want. The second one is moving average 50 EMA close. Okay. Moving average 50 exponential close. The third one is moving average 200 exponential close. Okay. And the fourth one is moving average 800 exponential close. Okay. So sometimes you find some people do not the 13 one, but the 51. You find some people do 48 or 50, though there is no much difference, okay? So anyone can do between the 48 and 50. Okay, so another thing I would really recommend highly is you squeeze your chart either to the second last or the last completely, zoom level 1 or zoom level 2, for you to be able to get a rough picture of what is happening. Okay, so this is our moving average 800. This is our 200. This is our 50. That the red one is our 13. Okay, so when we see such a scenario like our 800 is below us, then we know that we are on a strong uptrend. Okay, we know that we are on a strong uptrend when our 800 is below us. Same case when our 200 is below us. So the 800 is just to give a rough idea of the trend. Same with the 200, but mostly when during the crossover happens first, it will meet the 200 before it meets the 800. Okay, so in such a scenario, I comfortably know that this is an uptrend here. So I would not look for any trade for spiking down in such a setup where my 200 and my 800 is below me. Okay, so let's go ahead. There you go. You see one spike only came and it cut across all the moving averages. Just one spike. And then from there, the moving average 50 was used here. The moving average 50. But I wouldn't have so much followed this. You know why? This massive spike here, it covered more than, if you can check from here to here, is almost like 50 to 60 candles. Okay, yet it is just halfway. So this spike here was almost like between 100 to 120 candles. Okay, so anytime you get such a massive spike, the next minute I'll avoid taking on spikes for some time, and especially considering that prior to this our 800 and 200 were below us. Okay, so I would still wait for a comfortable moment. So let's go ahead now. You see it had to reset itself after here. It had to reset itself before the trend picked up completely and became strong. So how was I supposed to know this? How was I supposed to know this? These two spikes that came on the same place there. Do you see that? The two spikes that came on the same place is the same two spikes that came here. No, the same level on the TDI. Okay, and I told you when that happens on the TDI, the next thing I had to change today. I had to change today the color of our middle Bollinger Band to yellow, so that not yellow, to red, so that we can easily identify. So every time you find these spikes here, like here, two spikes on the same level there, then come and check here the middle. Okay, come and check the middle there, our market baseline. Do you see that? And do you see our peaks here that were on the same line? It was not even these two. It was not these two. It was not that. But it was this peak here. It was this peak here and this peak here. Okay? So a divergence like this, while on our TDI, a straight line like that. And come and check the market baseline here. The market baseline there. And there you go to your three massive spikes. Three massive spikes. That is almost like half of this spike that came here. So you got 1, 2, 3 spikes using our market baseline here. Okay, so let's continue. Around this area, I'm not seeing any setup, but this here after this first spike happened, which is that there, it happened at the top here, brought it to the to below the market baseline. So as it was trying to go up, it came and spiked in the middle, came down to the lower Bollinger Band. So as it was trying to come up here, it met again with the market baseline. Okay, it met again with the market baseline. And so you got this spike again using the market baseline. You got this spike again. Okay, now let's continue. So the market came. Check what happened here. It came again to the same level. The same level here. Same peaks. Yet on top, it was this peak here at the top and this one here. Okay, so it was that peak there and this peak here. So there's a very clear divergence to show you that we are going down. You see, like that. Now from there, do you see what happened from this point? So of course I would have missed this first point because I didn't know where it was going to spike. But immediately after seeing that here, that it had spiked on the same level. Okay, so my next target now would be all the spikes were below the moving averages. So I would use my moving average 13 as my resistance, or moving average 48 as my resistance here, or come to level 50. Okay, you see, even at this time, our Bollinger Band for the TDI had really come so tight. So your market was ranging within this area. So every time touch the top of the band, spike, go down, touch the top of the band, spike, go down, touch the top of the band, spike, go down, touch the part of the band, spike, come down again. Okay, so all this was within one ring area, which is down here. So, and how do you know that we will not go above that? During all this time from here to here, on our TDI, we were below level 50. Okay, all the spikes was below level 50 to tell you that we were in a seller's zone. So it was coming to level 50 and down, coming to level 50 and down. So something else, but this is very risky, very, very risky. But for me, because at this time I've seen how the market is behaving, if I really wanted to catch each single spike, I would do so. But still at the same time, I can scalp. Okay, let me take a line. Sorry, I'm trying to put my line to be a bit of whatever, but it's refusing to touch completely. But I think you understand what I try to mean. Okay, so in such a scenario, I know my line would be touching all the peaks of all these that are flowing down. So anytime it touched the line, I would scalp like 5 minutes going up. It touched the line down, I would scalp like 5 minutes going up. It touched the line down, I would scalp like 5 minutes going up. And what would have given me much direction at that time was this here. Okay, this here. As I told you in the other first TDI strategy where you can scalp, I was telling you when our Bollinger Bands have come together like this, or your market has established some certain trend using the Bollinger, it will not spike past that. It will, unless the first candles, which is now here, you see, comes and passes our level. So that is like breaking out of our ranging zone. Okay, so, and it was not a spike, it was candles going up when it wanted to break out of our zone. But the spikes themselves, sorry, I don't know if my arrow will go down there, but the spikes, which is now the down line, sorry, the spikes, which is the down line here, check very well, none of it went through the lower Bollinger Band. None of the spikes went lower than the Bollinger Band. So every time it spiked from the top of the Bollinger Band to the bottom, and I made sure that it touched the bottom of the Bollinger Band, yeah? Or you see, like this one exactly, it touched the next one, it touched the next one, it touched the next one, it touched the next one. We are done. So all these peaks that were touching, oh, this one it touched, this one it touched. So all those peaks that were touching, those was an amazing opportunity. Like if you are very keen, you can be able to scalp. Okay, so you are catching the spike at the top, and scalping a few minutes from the bottom. You catch a spike at the top and you catch a few minutes from the bottom. But make sure, how do you know when to when to buy and when not to buy in such a scenario? I want an arrow. Check like this here. It spiked and I think it came in 3 phases. My line has even entered successfully. So that place that I'm pointing, you see, it spiked. I think it came in 3 series so that it touched my lower line. Okay, so make sure that when you want to buy, like scalp 2-3 minutes, it must have touched your lower line, this one that I've drawn, this. Okay, it must have touched. Don't try to buy if it has not touched that line, neither has it not touched the lower part of the Bollinger Band. Okay, so this is a very good place for you that you can buy and sell at the same time. Okay, but for me, with my spike catching strategy, when I see such a trend, I really even don't close the market. I don't close. All I do is I lock my profit. I lock my profit as I go down. So every time a spike comes, I will lock half of it. But now this was more of a zigzag where the trend was not very steep. So I would be locking like a quarter of that new candle, a quarter of that new candle, a quarter of that new candle, so that it gives the market again some room to retrace back before the new spike comes. Okay, so I would have been locked out of the market around this place, the white arrow here. Sorry, I don't know what happened. But yeah, I have to go back to where I was. Sorry for that. I was trying to pick, yes, this here. So I would have been closed out of the market around this point where the white one was crossing over as it was going up. So I would have locked all this profit as I came down with it. Okay, we continue. These 2 spikes I could probably had missed because it didn't have, no, I could have missed the first. I could have missed the first, yeah, but I could not have missed this one here because it was on moving average 50 or 48. Okay, so anytime we are below the 200 and the 800, the 51 will be used mostly for spiking down, and that is why even you see at this point here it was used mostly as a reference. Okay, so here I would have probably placed this one here, and even if you see this one here, there's a small spike when it met the 200, a small spike. So after it spiked at 200 there, after it spiked at 200, I could have known that we will not go far. Okay, so probably at this time I could have really checked what was behaving around the market baseline, which is the middle of the Bollinger Band. So I would have placed, yes, I would have placed, just, trying, like whether it comes, well and good. If it doesn't come, still well and good. So even if I'd gotten a loss, it was like a loss of around 5 to 6 candles I closed. But and why it would even have given me more confidence is because this first spike happened at 200. Okay, so I would really target the market baseline here. I would target that. So whether it came, well and good. If I had missed it again, well and good. So it would have been either a loss of 6 candles or this profit that I got. Okay, so the second one I would have gotten because it was on the moving average 50. Okay, we continue. After I cross the 200, I no longer place. Okay, after I cross the 200, I no longer place. I'll leave the spikes alone. As long as I've crossed the 200, I'll leave the spikes alone. Okay, The only place I can choose to place is if it's given me this direction. This direction. Do you see the peaks of this first peak, this second peak, and the third peak? So after it's given me such direction, then I know always, I told you this market goes in sets of 3. So I would have known that after this third spike, other spikes would come. Okay, so probably I would have targeted these two, but it was not very serious for me because it even didn't reach the market baseline. Yeah, but it was not like a very serious, but yes, it was still obeying my structure like that, as long as it spiked on the same spot. So for sure, I could have gotten this. Yeah. We continue. Now check the next one that came. As long as again it spiked on the same level. There. As long as it spiked on the same level. Sorry for that. Sorry. As long as it spiked, so I would have missed the first spike. Why I would not have maybe gotten the first spike is because I didn't know how far it would go. This is 1000. So sometimes 1000 can really stretch for long. It can stretch for long. So I don't use the RSI to get the overbought and the oversold. No. So mostly my TDI, I do the reversals or the market baseline. Okay. So maybe this peak could have come and gone extra. Okay, and gone extra, like strain more to go up. But if I would be keen enough, I would have noticed that and I would have gotten it. Yeah, sometimes I try, I just put like 3-4 candles. If it doesn't spike, I close. Yes. So, but yeah, I could have missed the first, but all these others I could have gotten for sure. Why I could have gotten is because I would not be able to wait for the middle market baseline. Why? It was the 4th time it was retesting that level. This was the 3rd time here. So this was the 4th time that we are at the same peak on our TDI. Same peak. So I would not have waited for when it is the 3rd or the 4th time, the spikes that come at that time is very massive, very massive. So all you need to do is don't wait again for the market baseline, like the reversals on the baseline. In fact, at this time it uses the reversals of 13. Okay, it uses the reversals of 13. So I would have surely gotten all this as I came down with it. So take that word from me that if the peaks here are the 3rd time or the 4th time that it is retesting that position, so don't wait for the baseline. Okay, you just place it and come down. So the place that you will wait for the baseline, if it is one, like if it was this peak here and this peak here that is retesting for the first time, and it is causing a divergence between the top peak and the bottom peak, it is giving you a divergence. If it is like only 2 peaks that you are testing, but for this one it was retesting the 4th time, so I would have gone in without much delay. Okay, let's continue. Now when I was talking about you may never know how long it might take. Look here, you see the difference between this one here that didn't strain much and this one here that strained for so long. Okay, though the numbers are on top, so you may not be able to see much, but at least you can see it passed that level around here. Okay, around here. And so from this point onwards, it was straining. Yeah. So that is why I told you I don't use like such scenarios to be to catch the spikes. I wait until at least after one spike has come. Okay, at least after one spike has come. And you see, even after the spike came, because it was still on top, it came and retested here, the market baseline. A small spike also came. So even if you wanted to place there, yes, it was a very small mini spike, but it showed you that it would have spiked there, the market baseline. Okay, because they were all on the same level. Now see here again, it came and retested the same level, though it strained a bit, yes. But after that, after it had retested here, so probably you would have missed this because it came continuously. But look there, you could not have missed all. There was like a space of like 3 minutes. Like 3 minutes before the second spike came. So I could have gotten the second spike. I could have missed the first spike, but I could have gotten the second spike. Why was I trading it, placing it comfortably without waiting for the baseline? Is because again it was on the same peak as this and it had been there earlier. Okay, so I was still comfortable also with that level. And then check even also the second one, it comes down at level 50. So maybe I had timed it at baseline here and then it didn't spike, but it didn't take me long before it came. So when it was touching the top part of the band, it came. Okay, so we continue. You see again it went to the same spot again, same spot on top, and then as we are coming down, market baseline. Okay, market baseline. And how would you have known that? See again at the top, same line, same line. So if you are keen with this kind of setups, you will always use, okay, it's in this easier language, it spikes on the same spot, so you will use support and resistances. Okay, support and resistances, and as long as it gives you the divergences or spiking on the same spot, you know it must retest, or you wait for the market baseline. Okay, so there, and in fact it is 3 retestings. Check all these, not even 3, 4 of them spiking on the same area, all the 4. And at the bottom, it's first market baseline came, the second was on the moving average 2, spiked again, then we went, it broke that trend, came up again all the way. So as it was touching on top here before, though the TDI was not like on a straight line, but I would have used the top one because I'd seen it spiking on the same area. So you again caught this long spike here, retraced a bit and then came down. Okay, so I would have for sure gotten all this third spike, this second spike, the third and the fourth, but this second one maybe it given me the direction that more spikes are coming. Okay, so I would have missed the second one, but I would have gotten the third one and the fourth one. Okay, I would have gotten the third one and the fourth one. We continue. Then from there, after it has spiked around the same area for some time, always know that it will break that point and go out a bit. Okay, it will always break that point and go out a bit. So check here, first spike there comes, brings it from the extreme. Okay, and then down past the market baseline. As it is coming back to the baseline, the second spike comes. So don't be keen to trade the main reversals like the first spike, but wait for it at the baseline mostly. Okay, wait for it at the baseline mostly as it is trying to come back. Yeah, so you had gotten that second spike, and then the third one, maybe you would have missed the first one, but I would have mostly again tried from there, like placing when it reached the baseline, because of course I knew it might not go for long. But even if I missed the first one, for sure I would not have missed the second one. Okay, I would not have missed the second one. It was at level 13 and the third one was at level 50. Okay, the third one was at level 50. So you always use like either the baseline or the moving averages or the Bollinger Band. You see, like here, this one, it touched the top of the Bollinger Band and came down. Okay, touched the top of the Bollinger Band and came down. And while it was doing that, what could have given you the confidence is that this time it was using 50, moving average 50. Okay, we come again. So you could have missed this first spike because it didn't reach like the extreme peak. Let me check down here. Those peaks, the peak after the second, for the second spike down here, after the first one had come, so the second one is the same as our first one here. Okay, so since the lower one is on a straight line, yet on the upper one, this is higher than this, then I had known here that we are heading down. Okay, so I could have gotten from the second one as it was trying to cross 13. I could have gotten that and come down with it all the way. As I told you, I lock my profit. I don't close. I lock it so that I will be kicked out of the market. So all these spikes, I trail my stop loss, I trail my stop loss. When that spike comes, I come and put my stop loss here. When the last spike comes, I put my stop loss somewhere there. So as the market is trying to reverse, it will take me out as it's going back. I always put like, if the spike has come big like here, I put half. The next spike that comes, if it is a smaller one, I cover up to somewhere there. Like it covers what had retraced these few candles. So I cover it up to there so that I give it room. Most of the time, you will find like there is always a possibility of this scalping these few candles here coming to meet with these other candles here. So if you want to place at the peak of the previous candle like that. So this other trailing here will not take you off easily because sometimes you can place like half of this candle and the scalping candles came a bit too near. But if you place at the peak there, at the peak of the previous candle, so you place your stop loss there, you will not be taken out of the market completely. So you will still capture this last candle. So, but now this here, it would have taken me out of the market as it was going back. Okay, so let's continue. As long as I've crossed 50 and then go and cross 200, I'm not so keen to catch any spikes at that time unless I see consistency. But at this time, I really don't. But I can miss, you see, after, as we are going up, after this first straining, after the first straining and it has come down, I would check it as it is going back, the baseline. Okay, I would have checked it as it is going back. But sometimes I can even ignore all this first setup, which is now here. I can ignore it. But I know on my second setup as it is going up, there will always be a sweet point, okay? Either the peaks here will be equal or at the top here. You see this point and the next one that comes. Okay, so this first spike, this one, is always an indicator to tell you that other spikes. Why do I take this as an indicator? Is because we were not very far from what had happened here. So when you find spikes are coming successfully and small spikes, it's always giving you a warning that yes, we are now ready to spike after some long trend. Okay, what is the difference between this small spike and this small spike is that they were a bit small and it continued going. It continued going. It didn't try to break the strength of the trend. But here, it breaks, relaxes a bit, goes the second time, relaxes a bit, and then pretends like it wants to continue. And then a third small spike comes. So this third small spike, because sometimes you may not be able to determine here. Okay, you may not be able to determine if we are ready to reverse or not. But if this third small spike comes immediately after this, it tells you we will not go far. We will not go far. We are ready to spike back. Okay, so it's like these two were breaking the strength of the trend and then prepping itself. And then this first spike is now that we are ready to go down. So I would go to, in fact, for this, I really don't mind even being on, I don't mind being on deficit. So I would even add placed down here and go with it, deficit all the way, deficit all the way. But I'm adding more trades, I'm adding more trades until I reach the peak and then come down massively with it. Okay, come down massively with it. And even if you do not want to use the top, come and check here. It was at our market baseline that the spike started raining. Okay, so every time you find you get your signal at the top here and you've missed that, the next point, just come and check at the baseline. Sorry, I need now to cut my video because my phone has refused, my storage is full. But yeah, you understand, this is just a continuation mobile phone, but now you understand. So always check the peaks of the on the TDI and then come and check the market baseline. See also this, it's market baseline. Okay, we still go. I told you as long as it is above, I wouldn't mind much. As long as it is above, I wouldn't mind much, but still, it's still coming at the baseline. You see here, still coming at the baseline, and then when it is touching at the top also. So sometimes, yes, you can scalp this, but for me, as long as it's not shown me a clear way, I don't. Okay, so all this, we are uptrend, we are uptrend, we are uptrend. You see, uptrend. You see, uptrend. So the moving averages really help you to show you direction. Okay, and let's end there. So our next video will be, I will continue with the so this is the mobile version. I will do now the opposite of how you can be able to buy this as it is going up. Okay, so this was just basically, it was just basically for the spike. So the next that is coming is how to scalp or to move with the trend. You see here, still market baseline. Why? Because it had been on the same previous level. So the peaks and then the baseline. Same here, it was just a few pips from the baseline. Yeah, just a few pips from the baseline. So here again the baseline, but here it spiked before it reached the peak. But check this peak here and the peak of the previous baseline. It's the same peak. Okay, so even if you had missed that first spike, but you would have known from there, because it was the third time, like continuously here, here, here. So I would have known that this third time was a long trend. So I would have gone down with it as I just lock my profit and be going down. Okay, so check this. Anytime the market tries to reset itself, it will move from 13, meet 50, meet 200, and come all the way to 800. By the time it is at 800, it must stop. So it always goes in this set of 3, like it crosses all the moving averages and then stops at 800. Okay? And even if you check, after 800, it will just consolidate a bit, then start going up again. So it was just coming to touch the 800 and to use it as support. So it starts going up again. Okay? See again here. Comes and retests and goes back again. Comes and retests and goes back again. Okay? You see? It's using 800 as support. So it will test the 800 like 3 times before now starting to reverse again. Okay, so that's it for today. So happy trading, and please join our Telegram channel. We share a lot of resources there, and wishing you all the best in your trading journey. God bless. Bye.